If you think life insurance is something that you'll never personally benefit from, well, you're missing the bigger picture. Permanent insurance can provide liquidity, it can protect your business, and it can even fund opportunities long before the death claim is ever paid. Hi, my name is Laurent Munier. I'm a partner and advisor here at Safe Pacific Financial, and we work with Canadian entrepreneurs and incorporated professionals who want more than just the coverage. They want strategies that help their business to grow, and they want to help their families stay protected. So today, I'm going to walk you through the living benefits of life insurance and why does this deserve a bigger role in your financial plan than just a life insurance payout when you die. So for many Canadians, life insurance is still seen as a simple, use it or lose it product. Something that you pay premiums into for decades, but maybe you never even actually benefit from this yourself. And the common belief is that life insurance only matters when you pass away, at which point your family would receive the death benefit. That is important protection, and it is only just a part of the story. So what's often overlooked is that permanent life insurance policies like whole life insurance or universal life insurance are really designed to create value while you're still alive. They can build up a tremendous amount of cash value that can grow on a tax-deferred basis inside the contract. And then over time, that cash value can be accessed through either policy loans, collateral loans, you can withdraw it. And this helps you have liquidity for emergencies, for opportunities, for retirement income, for whatever you want. Now, many modern life insurance contracts include what's called a living benefit. So these are features that allow you to access a portion of the death benefit while you're alive if you get diagnosed with a serious illness or a disability or a chronic condition. This means that your life insurance can act as both a safety net for your family and a financial resource for you to use during your lifetime. Unfortunately, because of the widespread misunderstanding of how this works, way too many business owners and professionals let the policies sit idle. And so this leaves a perfectly good asset. It leaves cash trapped inside this asset and it's underutilized when it really could be serving the business. It could be serving you in building tax-efficient wealth strategies, or it could protect the family during a critical moment. And the truth is, when you structure it properly, life insurance in Canada is not just about leaving money behind, although that is important. It is about unlocking stability, liquidity, and flexibility right now. So we're going to get into more detail on how does this work and how to use your life insurance policy while you're alive now. So how does this work? Life insurance is not just about leaving money behind. It's also about what it can do for you while you're here. And with the right type of permanent policy, Canadian business owners and professionals can unlock multiple living benefits that provide cash flow, provide protection, and financial stability long before the death benefit is even something you're thinking about. So here's four of the most powerful ways that life insurance can serve you while you're alive. So number one, and you'll see this all over our channel, is the cash value that's inside the policy, and you can use it as a financial resource. So permanent life insurance policies, again, whole life, universal life, they can build a cash value inside that grows tax deferred, all under Canadian tax rules. So this means that that value will accumulate without being taxed every year, and it can create a powerful long-term asset. And the cash value isn't just locked away. You can access it. You can use it. So things that you can do, you can use a policy loan, which is borrowing money from the insurance company. You can use a collateral loan to access the cash value, which means that you're using the policy as security with a bank and then they give you a loan. Or you could do withdrawals. So you can actually withdraw money from the cash value in your policy. There is some taxability around that, and there is some taxability potential around policy loans. But all of those are options to you to get money quickly out of your life insurance policy. Now, if you're incorporated, this creates this immediate liquidity that can be used for whatever you want. Generally, it's emergencies, investments, opportunities. Those are the big three that we work with. So instead of selling investments to trigger taxes, you could borrow against the policy to access money. So this allows your money to compound inside whatever investments you're doing and inside the policy. So your money can keep growing even though you're using it. The second thing that we want to talk about is living benefits. So you can get what's called accelerated death benefits. So permanent life insurance includes these benefit riders if you set them up right. And these will allow you to access part of the death benefit early if you face a critical illness or a chronic condition or some sort of terminal diagnosis. You can actually start to use the life insurance before you pass away. And so this feature can provide tax-free lump sum that you can use for whatever you want, but generally this would be for paying medical bills that are not covered by your provincial or your private health plan. It can replace lost income during recovery. It can cover things like long-term care, or you have home expenses, you need to get renovations, so you have a lift up the stairs or something like that, or a special type of bathtub that you can get in and out of. And it can keep your business running by funding payroll expenses or overhead if you get one of these critical illnesses or chronic conditions or a terminal diagnosis, so that not everything has to fall apart. Now, if you're a Canadian entrepreneur, you're a business owner, this could mean the difference between keeping the doors open during a health crisis or being forced to sell or to shut down because of a health crisis. Now, third, corporate-owned life insurance can be great for business planning. So when the life insurance policy is owned by your corporation, it becomes a strategic business planning tool that can strengthen both your company and your estate plan. Corporate insurance can do a few things. So number one, like we've said a few times now, a source of liquidity. So you can borrow against the cash values to finance your operations, to expand, to buy inventory, to access working capital without triggering a taxable withdrawal. All sorts of reasons that you can access the money. Another big one is key person protection. So if you've got partners or other people in the business, or a senior executive or a shareholder or somebody passes away, the policy can provide immediate funds to help the company stabilize, to recruit a new person, or to continue operations. And generally this key man or key person insurance will be written into your shareholders agreement that you're supposed to get life insurance. Often we see these shareholders agreements, they don't have the life insurance set up, but it's written in the shareholders agreement that you're supposed to get it done. Another thing it can help with is succession funding. So this doesn't mean you have to pass away. This could even be succession for the business while you're alive. Corporate-owned insurance can be used to fund a buy-sell agreement. So this would be when one of the partners dies, this ensures that the surviving shareholders can buy out the estate of the deceased partner quickly and tax efficiently. But it can also be used in conjunction with what's called an estate freeze. You can crystallize the value of the shares of your company. So you can say, okay, I grew the company from 0 to 1 million, but now I'm going to transfer it to this other person. So I'm going to crystallize the value at $1 million. And I know that my capital gain is going to be based on this. And then whoever's taking it over, their capital gain is going to start at $1 million and whatever they can increase it to. So you can use a life insurance policy to pay for this future capital gain of yours when you succeed your business to somebody else. Also great for tax efficient estate planning. So the death benefits on a corporate policy will flow into what's called a capital dividend account when they're set up correctly, which can allow for a tax-free payout to the beneficiaries of the shareholders or your heirs, however you want to set this thing up. This makes corporate-owned life insurance one of the most efficient succession planning tools in Canada because it pays out quickly, it pays out tax-free. By creating the CDA in your corporation, it allows that money to flow to the shareholders tax-free. So it allows a tremendous amount of money to go to who you want it to go to without Ottawa coming and saying, hi, half of that is mine. Some people do love sending half their money to Ottawa, but they're generally not our clients. Our clients generally like to keep their money in their pocket, and they generally feel like they know better what to do with their own money rather than sending it to Ottawa to light it on fire and do whatever they're doing with it. Number 4, another big advantage is the concept of infinite banking or self-financing. There's a lot of different names for this. Cash flow banking, there's tons of names. If you just search YouTube, everybody's got their own version of it. But some Canadian business owners use their whole life insurance policies for this concept of infinite banking. Be your own banker is another name for it. And the idea is really simple. So instead of relying on banks for financing, you could actually leverage your policy's growing cash value to fund major purchases, to invest, for business expansions, to buy inventory, to do whatever you want, basically, right? We've had clients do all sorts of different things. I'm thinking of a physiotherapist who took loans from his policy to rebuild. He moved into a new location and needed to build a new gym studio and funded it all through loans off his life insurance. I'm thinking of another client of ours who purchases a few $1 million worth of inventory a couple times a year and then obviously sells it off and then buys new inventory. So finances that inventory through loans from the life insurance policy. And then a third one, this actually is a recent one. The CRA right now is on a tear and they're auditing whoever they can find. They've also just hired a whole bunch of people. So they're going to be auditing more and more people. So one of our clients is going through a CRA audit right now, and it's been happening for about a year. And so he can't get loans from banks because banks don't want to lend to you while you're going through a CRA audit. They want that to be finished and they want to know what's the result and they want everything to be cleaner. So he's actually financing a big investment into a new deal by borrowing money from his life insurance policy, because this life insurance policy sits outside of the banking system and he can just borrow money directly from the insurance company without a credit check, without notifying the CRA, without having to ask a bank for permission. And he doesn't have to tell anybody what the money's for. Literally just sign one piece of paper, ask for the money, and you would receive it within a couple of days. And so we're actually doing that right now. Like, this is happening this week. So a bunch of reasons that business owners would want to do this. But really, here's how it works, right? So number one is that you would have funded the policy. So there would be cash already in the policy. This doesn't work if the cash is not already in the policy, but then you borrow against the cash value that's inside this policy for whatever you need. The policy continues to grow in the background because it's receiving a dividend from the insurance company's participating account. So the policy grows unaffected by the loan, and you have this compounding inside the policy that doesn't stop because you don't take the money out, you borrow in the money. And then you can repay the loan on your own schedule. So you're sort of like paying yourself back instead of paying it back to a bank. You're putting it back into your own policy, and then when your policy has money in it again, you can borrow it again, and then you pay it back, and then you borrow it again, and you do this a bunch of times. I do this myself. I take policy loans from my own policy like a couple times a year. And what does this do? This creates a private, tax-efficient financing system that can give business owners more control over their capital, and it can keep the wealth compounding inside the policy. So that is a huge advantage, is that you don't interrupt the compounding, and it can really accelerate over time. Now, here's like a real world impact, and why does all of this matter, right? So one thing is to talk about the theory of how does permanent life insurance work, but really it's another thing to see how it makes a real difference in real people's lives, in real Canadian business owners' lives, in Canadian family lives, in Canadian professional lives. When you structure it properly, the life insurance can deliver really tangible financial advantages that a traditional account or like a bank account simply can't match. So now imagine this. Your incorporated business is ready to expand. You're going to open a second location, or you're going to buy new equipment, or you're going to buy another company to grow. So you talk to the bank, but the lending terms are either restrictive or it's going to be slow to actually give you the money. The interest rates are a little high right now. So there's pros and cons, right? If you've been building the cash value inside of your corporate-owned life insurance policy, you have access to this private pool of capital. You can borrow against that cash value quickly, flexibly, and without having to ask anybody for approval. And the policy continues to grow in the background while you're taking these loans. And the growth is on a tax-deferred basis, right? So this kind of speed, this kind of autonomy is something that a lot of entrepreneurs really, really want, but they don't know how to get it. And you don't get it through like a regular bank saving or investment system, right? Now, let's look at a different scenario. Something bad happens, illness, disability. This strikes a key shareholder. Maybe it's you or your partner or a business owner. Now, without proper preparations, this could put the company's cash flow and payroll at risk, which would force tough decisions at really a bad time. So with a living benefits rider, which we generally would add to one of these policies, so you could add, say, a critical illness rider, you can set up your own disability policies, or you can have accelerated death benefits. There's a bunch of different riders. These are just a few of them. But a portion of this policy's value can be accessed immediately to cover medical bills, to replace lost income, or to just keep your company running, to keep the lights on, to keep your payroll going. This means that the business and the families that are depending on it can stay afloat without totally ruining the long-term wealth strategy, or without having to liquidate the assets or having to sell the business. So in both of these cases, life insurance isn't just the protection for the future, it's a living financial tool that provides liquidity, stability, and it gives you resilience. So for Canadian entrepreneurs, this could be the difference between losing momentum during a crisis or keeping the company on track to grow and allowing it to thrive and potentially transfer it to the next generation. Now, on our perspective, right, at Safe Pacific, we don't just look at life insurance as just a death benefit, even though that is a very important part of it. We see it as a multifunctional kind of financial asset that can strengthen your corporate balance sheet. It can create liquidity when you need it, and it can support long-term estate planning and succession planning for the business. Now, for Canadian business owners, and if you're an incorporated professional, and when I say incorporated professional, this is things like lawyers or accountants and stuff. You're a partner and you're working at the firm, but you also have your own personal professional corporation. A lot of doctors, a lot of people in the medical field have this, or dentists have this. A lot of engineers actually have this as well. Life insurance is one of those few tools that can deliver the protection, the growth, and the tax efficiency all in one place. The benefits compound when you can have it inside the corporation. And this is how we integrate it into your strategy. So number one is we do corporate integration. We design the policy to fit into your corporate structure. So that means building cash value that you can borrow against for business loans, using it to fund the buy-sell agreement that's probably in your shareholders agreement that you haven't actually done, or maintaining liquidity for expansion, or like I said, for inventory, for emergencies, or for just investing in yourself. Then we also want to look at living benefits. So we want to make sure that your policy isn't just valuable when you die. So having these different riders and designing the policies to have living benefits, we can make sure that the coverage helps if you have an illness or a disability or a critical health event. So this protects your income, this protects your company, this protects your family, this protects your staff, this protects your other partners, protects everybody who's depending on you to go out and make money tomorrow if you can't. And then you've got the tax efficient legacy planning, right? So you want to align the life insurance with things like your Capital Dividend Account, your CDA. This allows the insurance proceeds to flow through the corporation and be paid out to the shareholders or to your heirs or beneficiaries on a tax-free basis, meaning this is really one of the most efficient intergenerational wealth transfer strategies that is available. So if you want to give money to your next generation versus give headaches and tax owing to the next generation, this is a great way to do it. And then you've got advanced strategies. So this is definitely not for everyone, and this is for when it's appropriate, and we would work with you on this. But some clients, we explore advanced strategies, which could be things like infinite banking. So by leveraging the cash value in the whole life policy, you can create your own private financing system. You can borrow against your policy for your business needs or for investment needs, while the cash value in the policy continues to compound in the background. You could also borrow from your policy to lend to somebody else. So we actually have clients doing this. They're doing private lending, what's called hard money lending in the real estate world. And so sometimes people need money for real estate and they're waiting on a mortgage, or they have like a couple of months where something's not done. And so they borrow money at usually a much higher interest rate from what's called a hard money lender. And so we have clients doing this where if somebody asks them for money, they borrow money from their policy, and I'm making up numbers here, call it 6%, and then they'll lend it out to somebody else at like 14. So that's just interest arbitrage, and that's a good deal. You do that all day, every day. So our role here is really to be your financial quarterback, right? We want to make sure that the insurance strategy is not just a policy, but it integrates into the plan and it supports your business continuity. It supports your family protection. It supports your long-term legacy. It supports your financing needs. It supports your retirement, right? With the ultimate goal of ensuring that the life insurance works for you at every stage of your life, at every stage of your growth, right? We want to grow your business. We want to protect your wealth. We want to pass it on to the next generation and do that tax efficiently. Now, I'm going to wrap this up because we are getting a little long, but life insurance as a living asset. So too often, Canadians can see life insurance as a cost of doing business. And if you set it up certain ways, it is. It's a monthly or annual premium, and you don't really get a benefit unless you die, and then you don't really get a benefit, but somebody else gets a benefit. But this is a limited view, and it really overlooks the true power of what's called permanent life insurance. So when it's structured properly, The insurance isn't just protection for your heirs or your beneficiaries. It's a resource that you're already investing in that can fuel your business growth. It can create corporate liquidity. It can let you take advantage of opportunities, and it can deliver peace of mind while you're alive. And you can enjoy it while you're alive. You don't have to wait till you die to get the benefit from the life insurance policy. And if you're incorporated, if you're a professional, you're a business owner, you're an entrepreneur, the life insurance can serve really multiple purposes, right? It can give you access to cash in a tax-deferred way. It can offer those living benefits if something happens to you, like an illness or a disability. It can strengthen your corporate balance sheet because the cash value in the life insurance looks good on a balance sheet. And it can create one of the most tax-efficient wealth transfer strategies in Canada because you can use what's called that Capital Dividend Account, or the CDA. And the bottom line is really permanent insurance should be working for you today, not only after you're gone. So by integrating it into your corporate and into your estate planning, you can create this living financial asset that protects your family, it can stabilize your business, and it can help you build generational wealth. Now, I have just said a lot about using permanent life insurance in your corporation and the various benefits for it. So if any of this piqued your interest, and if this is something that you want to talk about, if you're ready to unlock the potential of how a life insurance policy can work for you and how does it fit inside your corporate plan, how does it fit inside your family plan, how does it fit inside your intergenerational wealth plan, well, this is what we do. We're here to help. We can help you to evaluate the benefits of different types of policies, of different types of funding mechanisms. What if I put this much into it? What if I put that much into it? And what if I pay for it for a few years? What if I pay for it for a long time? And not only just setting it up, but being there for you over time and servicing you over time and showing you how to use it. Because there are a lot of advisors out there that do kind of put these policies in place. And then they're like, here you go, thank you, bye. We don't do that. We definitely service our clients and we help them over time to use the policy for their own benefit. Right? And really where we're very strong is in structuring these policies for your business purposes. And we would find out, right? Like whether that's to fund the buy-sell agreement, to protect a key shareholder, to create corporate liquidity, we design it in the way that fits the strategy that you're going for, right? And we integrate it with the tax and estate planning. We use the tools like your Capital Dividend Account or your CDA, and we work with your accountant on that to ensure that the wealth transfers smoothly to your heirs while minimizing how much goes to the CRA and how much you're sending to Ottawa. So how do you take next steps? Well, it's really easy. You go to our website. The website is safepacific.com. I'm going to link it here below the video. It's going to be in the description, or it's going to be click on something. Safepacific.com. When you get there, there are so many buttons that you can click on that'll either book a meeting into our calendar right away, or it'll send us a message and then somebody will reply to you if you've got specific questions. If you've got questions, you can actually leave them below this video in the comments. We check those comments all the time and we reply to those personally. And that's how we take next steps. So before you go, if you found any of this helpful, please do me a big favor. I just need you to click a couple buttons. So click like, click subscribe, and then share this with another Canadian business owner or another Canadian professional who maybe doesn't know how this works, or maybe does sort of know how this works, but wants somebody trustworthy to do it for them. We're happy to meet. We're happy to help. If we can help, we will tell you. If we can't help, we will also tell you. Nobody here is trying to sell you anything. Nobody's trying to pressure you into signing anything. That's just not how we are. So next steps for you, go to the website safepacific.com, and I will see you next time.